Inheritance tax in Canada. Well, the good news is that there is currently in 2023, there is no inheritance tax in Canada. This was not always the case. The Income Tax Act was altered about 50 years ago in 1971. The rules were changed when, up until 1971, there actually was an inheritance tax in Canada. But under current legislation, when you're receiving an inheritance, you are receiving after-tax dollars, so the person receiving, the beneficiary receiving an inheritance, is getting these funds or property completely tax-free. Same with gifts. Now, the bad news is that apparently there is already a task force in Ottawa looking at inheritance tax again and bringing it possibly back just to increase government's revenue. There is no inheritance tax in Canada, but there are other taxes that will be triggered when somebody passes on. Well, first of all, when a person passes on in Canada, all of their assets are deemed disposed of. CRA will look at all of your assets, and all of your assets will be sold, considered sold, or deemed disposed of at current market value. And your executor or executrix must file your final tax return. So that's the return that would be filed for year of death. And any income received, whether it's employment income, pension income, CPP, OAS, would be listed in that final tax return. Plus, any capital gains that would be triggered as a result of this deemed disposition would also be listed on this final tax return. So if you have any real estate, except for your principal residence, if you have rental properties, investment properties, if you have a cabin or a cottage, that would have to be deemed disposed of as well. If you have an investment portfolio, or if you have any business assets that have appreciated in value, all of these capital gains would be deemed triggered, and those properties would be deemed disposed of. And as I said earlier, executor or executrix is the person who is responsible for filing your final tax return. On top of deemed disposition capital gains, we have to also consider your RSPs and RIFs. Your RSPs and RIFs would be considered fully withdrawn and fully taxable. And generally, RSPs and RIFs are your most expensive assets and a huge source of deferred tax liability. On top of income tax, there's also probate. And each province has a different provincial probate rate. In BC, it's about 1.4%, very similar to Ontario. And any assets that will pass through your estate would attract probate, which again, it's 1.4%. Now, let's look at some exemptions. First of all, I already mentioned your principal residence. Your principal residence will be exempt from capital gains. The other is the TFSA, tax-free savings accounts, which are fantastic. Those are also exempt. And insurance policies. Life insurance policies payout are exempt from capital gains or from any taxation whatsoever, for that matter. The other exemptions that are available are transfers to spouse or common law spouse, or transfers to a qualifying survivor. So let's start with a spouse or a common law. Essentially, all of your assets, non-registered or registered assets, properties, business assets, under certain circumstances could roll over to your spouse or common law spouse on a tax deferred basis, and then all of these capital gains I mentioned earlier would be triggered on second death. RSPs, RIFs, if you were to appoint your spouse, the same thing, your spouse would receive these assets on a tax-free basis or a tax deferred basis, but also there's a qualifying survivor provision, and qualifying survivor is also physically or mentally dependent child or a grandchild, or a child or a grandchild under the age of 18 who is financially dependent on you is also a qualifying survivor and would be able to receive the value of your RIF or RSP on a tax deferred basis. The last exemption only is applicable to business owner. There's a small business capital gain exemption, lifetime capital gain exemption, which is just under $1 million. So again, not applicable for everybody, but it is out there. The number one recommendation we have for everybody out there is to get a will, because if you die without a will, Essentially, a public trustee, depending on your province, but provincial public trustee is appointed as your executor or executrix, and that person would be responsible for handling your affairs, which is not ideal at all. Thanks again for tuning in today. Please like the channel, please subscribe to the channel, and see you next time.